Hello guys, I am Omkar. I am here to explain the concept of the accounting, that is the form of the statement of profit and loss account part 2 as per the provision of Schedule 3 of a Companies Act. Today's video we have a discussing about the structure of this profit and loss account as per the Companies Act of Schedule 3 part 2. Then let's upon the explain the what is the concept. The statement of a profit and loss is one of the most important financial statement of a company. It shows the financial performance of a company over a specific accounting period, usually 1 year, by summarizing income, expenses, and profit or loss. It explains how the net profit or net loss is arrived at during the period. What is the purpose of the making the statement of a profit and loss? The main objective are to measure the profitability of the business, to show operational efficiency of a management, to help share their they help to the shareholders, investor, creditors, and government authority assess company performance to serve as a basis for the tax calculation and dividend decision. Part 2, statement of a profit and loss in the middle, written in middle. Name of the company, the name which company you have calculate the profit and loss, that company name is a mention. Statement of profit and loss for the period ended. Which period have we have generate the profit and calculate the profit and loss statement? That's year. Month ended. Month means March and 2000 anyways. There are four columns: particulars, note number, figures for the current reporting period, figures for the previous reporting period. Revenue from operation. This represents the main income earned from the business activity. Such as if a company has a manufacturing and trading company, then it involves the sales of goods. Then if a company has a servicing company, then it has includes the sales of service and other operating revenue. It shows the how strong the company's primary business operation have. Other operating income means the income is related to the main company's main product and business activities. That includes in the revenue from operation. And revenue from operation also called as operating income, and other income also called as a non-operating income. In a non-operating income, other income that includes uh, the income earned not directly related to the main business activity, such as interest received, dividend received, commission received, profit on the sales of investment, rent received. That's and that's it helps to distinguish operating income from the non-operating income. Then total revenue. Total revenue means the sum of the revenue from operation and other income. Uh, then expenses. Expenses are shown in a classified manner to clearly explain cost structure. Cost of materials consumed. Cost of material consumed means the raw material used in production. Purchase of a stock in a trade means goods purchased for a resale. Change in a inventories of finished goods, stock in a trade, work in a progress. That is the increase or decrease in a stock of finished goods, work in progress, and stock in trade. It means the in a simple language we have also called as the opening balance and closing balance of the stock in trade and work in progress. Opening balance minus closing balance, the amount was written as in outer column. Employee benefits expenses. Uh, that means the employee have charged the salary and wages, bonus, provident fund, and other benefits. That expenses includes in the employee benefits expenses. Finance cost. Finance cost as the interest on a loan. Where a company has taken the loan from the bank, then company has to charge the bank charges to company as a interest. That interest includes in the finance cost, debentures, and also the bank charges. And depreciation and amortization expenses means reduction in value of a fixed asset over time, means in a simple language depreciation of on the fixed asset. Then other expenses, it includes rent, electricity, repairs, advertising, transport, administrative expenses. This detail classified helps analyze cost controls and efficiency. It helps to the classify the cost controls and efficiency. Other expenses includes rent received, paid, sorry, rent paid, electricity paid, repairs and maintenance charges, advertising, transport, administrative expenses, and other charges. Has include audit fees. Then total expenses means the total of the all expenses we have our calculate, that's total. Then before profit, expectational items tax means the profit before expectational items, and the tax refers to the company's profit from a normal business operation before accounting for expectational items, income tax expenses. Then exceptional items means are income or expenses that are unusual and in a nature and do not occur regularly in the normal course of a business, because they can distort true performance. They are shown separately uh, in the profit and loss account. Then profit loss before tax, it means the profit before tax is calculated as total income minus total expenses. It shows the earning of the company before tax liability. Then tax income includes current tax and deferred tax. This reflects the statutory tax obligation of the company. Then profit loss for the period from continuing operation. This is the final net profit or net loss after tax. It's represent the true earnings available to shareholders. Profit loss for discontinued operation, tax expenses of discontinued operation, profit loss from discontinued operation after tax. It is the net profit or net loss and from operation that the company has disposed of a plan to dispose of a calculated after deducting tax and shown separately in the statement of a profit and loss. And profit loss for the period. This is the final net profit or net loss after tax. It represents the true earnings available to shareholders. Other compressive income, if applicable, it's not compulsory. Includes items like revaluation gains, loss, actuarial gains, losses. These items affect net worth but not regular operating profit. That includes items that will not be reclassified to profit or loss, income tax relating to the items that will not be reclassified to profit or loss, items that will be reclassified to profit or loss, income tax relating to the items that will be reclassified to profit or loss, total comprehensive income for the period. It's profit loss of the period plus other comprehensive income. Compressing profit loss and other comprehensive income for the period. That's profit for the period plus other compressed income. It gives a complete picture of a financial performance. Earnings per equity share for continuing operation. It means the EPS. The basic EPS is the profit from continuing operation, means the after tax and preference divided by the weighted average number of equity shares outstanding. And diluted EPS means the profit from continuing operation divided by a weighted average number of equity share after considering quotational equity shares like convertible debentures option. Earnings per equity, uh, then earnings per equity, discontinue for a discontinue operation. Basic APS is the profit loss from discontinue operation after tax divided by weighted average number of equity shares outstanding. And diluted EPS is the profit loss from discontinued operations divided by weighted average number of equity shares after considering quotational equity shares, earnings per equity share of for continuing and discontinued operations. Uh, then earnings are equity share for discontinued and continuing operation. Basic EPS is the total profit loss means from continue plus discontinued operation after tax and preference divided by weighted average number of equity shares outstanding. Diluted EPS includes the total profit loss. It includes continuing plus discontinued operation divided by weighted average number of equity shares after considering quotational equity shares. Thank you for today's section. Any doubts?